All right, good morning, everyone. Louis Borsellino, manovermarket.com, and this is the morning call for CL oil futures. All right, so we've had a low of 47.04. I've got it in this teal line here, this light blue line, and then we've had a high of 48, I believe 19. 48.19 is the high. So I'm gonna for the new viewers, I'm gonna give you I'm gonna give some terminology out, but you'll catch on eventually, and I'll do some educational stuff. So as you can see, as Globex traded open last night, the market has actually been going in a steady downtrend, and I think last week's low is 46.83, 46.83. Um, so you're going to hear the tone value, high, value low, and point of control. So this shaded area is the value area. The value area is basically where 65% of all the trades happened on Friday. So the low of the value area is 47.61, 47.61. 48.30 is the point or the price inflection where the most volume occurred. So most contracts traded were at 48.30. The high is 48.63, 48.63. These dotted lines you can see is a proprietary a pivot system that we've developed. Pat Tabbitt and myself have developed over the last basically almost 20 years, and they've gone through a couple of revisions. But when they're lit up like this in red, it means that technically the market is in a downtrend. I've got the 15-minute chart up here because uh, it, it, it hasn't traded enough. You have to print the value areas on the 5 minute. On my day trading, I like to use a 5 minute chart and so on. Um, well, look, oil hasn't changed. It's been in a downtrend. I got these other numbers you see here. We've calculated the pivot, and the pivot calculation for so that this is nothing new. This is like what they call the floor pivots. Is at 48.11, which would put S1. So the first area of support is 47 and a quarter. We've got S2 at 46 half. All right, and we got S3 hour down at 45.75. 45.75. Okay, and then on the upside, so what we're going to look for, this orange number is 47.56, which we determined, and this is another one of our proprietary indicators that we believe this is the bull bear zone. The bull bear zone means that the market should rally above this, or the market, should, if it stays below it, should stay below it. It's really simple, bull bear zone. Um, what we'd like to see on days when you're opening up where the market is lower like this is if the market can fight back, get inside value, spend some time in value, and move up to to the point of control of last Friday. Okay, so this is the teal line, which would be for so it'd have to take out the Globex high basically to do that and get back inside value. So our bull bear zone is 47.56. Okay, now I'm going to give you some other concepts, and we got to be careful. Can't go too long. I will do some educational stuff, and if you got questions, you can email me. All right, this is a market profile. So basically, this is a day session only. So now, before there was 24-hour trading and Globex trading, markets would open up and open and close, and then any sort of geopolitical event or any sort of news that came out would affect the market. We would what you have what we call like a gap opening. So if the market opens, so you see this here, even though it was 24 hours, what we do in charting this is that we exclude the 24 hour and we just look at the day. So if you look at oil, there's a gap up here at 52.46 down to 51.23. Okay, and then we got another small gap right here. Okay, 49.95 down to basically about 49.25. Now, the reason we do this is that even though there's 24-hour trading, the bulk of the volume is done during the day, and and at night, unless there's some sort of uh, geopolitical event, some sort of financial news, some sort of world crisis that basically unfolds overnight. So we look at these gaps because markets like continuity. Markets do not like to have these gaps. They like to be filled in. So we look at them as targets. So on the upside, we're looking for those as targets. Now, here's the bad thing about gaps. Good and thing. Yes, they get filled in, but on the other side of the coin, a gap can sit there for a year. A gap can sit there for a day. It can sit there for 2 years. But at the end of the day, gaps will get filled in, and that's what markets do. They need the continuity. So when you hear me talking about market gaps, it's because we've excluded the overnight. We've excluded the overnight in our analysis on certain charts. All right, I'm going to go to here because uh, the market's in a downtrend. I wanted to show you some of the things that you know. I think that if one thing is I've learned over the last basically 30 years is that markets move in directions and then they tend to make lows and highs that people don't believe. So I started trading years ago in the gold pit when gold was $850 an ounce, and that was 1980, 82. So, or I'm sorry, 1981. So what I've put on the chart here is a couple of levels that I think that are going to be surprising to people, right? So we've already hit the 49 level. Now I'm looking for the 40 level, $40 oil, 38 and 34. 34. The last time we see these lows is between 2007 and 2009. All right. So this is a whole other video if you want to talk about why oil's at where it's at. But so to me, these are targets between this low and those gaps that have to be filled in. So I'm looking for the market to trade in that range. So this is what I look at. I'll be giving you a closing video today based on market action. The market is in a downtrend. We are looking, the market's going to have to get above that bull bear zone for us to um, uh, even consider thinking that the market could rally from there. Now, remember, this is all, and so we got our 5 minute pivot, which is the one that like to use in our day trading, sitting right here at 47.40. Now, you see how this is dynamic and it changes throughout the day. So I like to put up on Twitter when these things are changing because they tend to be uh, dynamic as they move down, and then they become points that we look at to see if trend is changing throughout the day. All right, Louis Borslino, Man Over Market. I'm going to get the S&P video out shortly. Thank you. Bye.